Yes, hello guys. I really appreciate doing this with you guys. I really appreciate showing up this morning and showing what I have on watch, and I hope someone there watches it and also input his comment. And also I just need a comment. I also need a review. Also wanted to be curious, what do you have on watch today? I just wanted to know, and by that I can also, I'm open to connections, open to review, and open I'm always teachable. You can pay something to my DM. I will always be able to reply you if I'm online. So I'll be talking to you guys on the pairs I have on watch today, and also I have just 2 pairs on watch. And you can see the DSY yesterday when I was dropping my video, I told you that we are looking for a consolidation for the upside, and now we are trying to shape up to find we have to find a pattern for that move to the upside. So you just remain sharp and stay ready for what is about to come to the market. Don't think that the market is slow and you just need to focus, or you need to just go out from the market and wait maybe next week. No, you don't know what might be happening. Even on Friday the market is still open, so you might have to carry that big impulsive move, and that might make you the 10%, the 5%, the 6% you are waiting for, or you are looking for to make. So anyway, let's dive in and look at what I have. So if you can see the DSY on the daily, you can see that we ended yesterday with a bearish indecision candlestick, just kind of an indecision candlestick. So if you go to the 4 hour, but before we go to the 4 hour, you can see that I'm looking for price to tap into this significant area, and if you can see that we have more chance now to move us to this low and give us this 1, 2, 3 structure and these 2 bases, and then you're looking to capitalize on this leg, which might make you the 8, 6, 7% on the way up there. So if we go to the 4 hour, you can see that we reacted from this hook point on the left. And how do we react on that hook point? We reacted impulsively. So now, before the reaction, we are looking for this kind of pattern, but what happened? It failed and went down to tap liquidity, and this is the move. Now what I'm looking at actually is a flag, a larger flag that will send this to the upside, and that is what we are creating. Let's go to the 1 hour. You go to the 1 hour, you can see that you have something like, you're trying to look for something like 2 leg. Let's go back, trying to look for something like this to play 1, 2, and there is the 1, 2, 3 reacting to this area and this area. Then you can set your set your entry and look for the upward for the buys. So now this will correlate to the euro dollar, pounds dollar, Aussie dollar, New Zealand dollar. So now that we have that our clue and our bias that the DSY is going to the upside, then you also know that the euro dollar will be selling off, the pound dollar will be selling off. So you just looking for your patterns and your entry, your confirmation and your entry. So that's what we'll be looking at. So I have 2 pairs on watch today, so I will dive in what I'm looking for. So the first pair I have on watch is JPN 225. If you go to the JPN 225, let's go to our daily to see what kind of formation we are seeing. So you can see that I do my real line here, that this is the first all-time high, this is the all-time high, that price move aggressively down and start consolidating and going there. And what happened when price reaches there? Price reacted with impulsively, and price broke that 2 points on the left. It broke this area impulsively, and after broken this area impulsively, what happened? You can see that it has given us a bearish candlestick twice, and we are trading below this area. That is the very clear I wanted. So you will go to the 4 hour. You can see on the 4 hour that we reacted it's kind of consolidation, but not consolidation. You can see that reacted the first time, it failed to create a structure, it reacted, broke here, failed to give us a structure, then it goes back to tap into that hook point on the left on the high, then it moves back in. Now we are consolidating for that next move to the downside. So now it's not visible on the 4 hour. Let's go to the 1 hour and see it clearly. Now we can see it clearly now. What can we see? We can see that it reacted here and push, give us a little 2 flag structure, which I didn't capitalize on because we are on this we are sitting on this what, on this major area on the left, which is a very high risk trade. You know that is not valid, it's valid, but it's a high risk because what, price is sitting on that major area on the left, which might tag you in and tag you out and start consolidating and what, having a messy what type of structure. So now, but what is the clue now? We have broken what, inside or what, inside there, and we are trading below here, which is what, a very good what, a very good area to what, to take a trade. So now what am I looking at? I'm looking for that 2 touch, which I have the first touch, I have the second touch. What I'm looking now is for price to come to this area and give me the third touch for me what, for me to take the sell. I'll be taking this on the 15 minutes because it's visible on the 15 minutes. If you go to the 15 minutes, you can see it yourself. You can see the structure. You can see that we have a middle section. You can see the impulse, correction, continuation to this area. And then when I have, if I have my high test or a retrace candle, I will take it as a what, as a set stop, and then what, try to what, to sell and manage to this area, and what, downward. So this is a nice trade that you don't want to lose hold of. So it's very nice. So we're just waiting patiently, but if we don't see that kind of trade, you see that price will impulsively go up and then react from here. So if price reacted there, you don't take a recent trade here, you wait for impulse back, wait for impulse, then you wait for a flag, 15-minute flag, and then what, you mitigate started taking. But if not, you see that price will start what, will start giving us what, a structure that is not visible, and it's just like creating something. If a structure that is not visible, then you just wait for next week or Friday, and when you see the market is clear, then you can start anticipating trade on it. So that's what I'll be looking for on JPN 225. So if I go to my euro dollar is same thing. I was looking for the DSY to buy, so I'll be looking for this to sell. What I'm just looking for, if you go to the daily, let's start from the daily. If you go to the daily, you can see what we have. You see that price tapped in this area, this major value area on the left. It reacted impulsively, pushed back the reaction, create what, a consolidation here that is telling the buyers, hey, we are trying to buy. But what happened? It goes back out again, reacted to this inflation here on the left. Then what happened? It came back to this hook point on the left and reacted it, and look at the impulse. So now we are in a continuation state. In the continuation state, we are looking for a pattern to entertain what, the short. So on the 4 hour, what I'm looking for on the 4 hour is just a 3-touch consideration. I will be taking my trade on the override. And someone will be asking me what is an override and what is the 2-touch structure. So I will tell you what the 2-touch structure is. Just, you can see that it reacted from this hook point, and then what happened? It broke impulsively. You can see some people catch a trade here. There's a little flag here which was not visible to me, and this is what I'm looking for to manage to this area and what, even lower. So now if you go to the 1 hour, because this structure is visible on the 1 hour, you can see it very clearly that, let me remove all this. You can see it clearly that we have our 1, we have our 2. So I'm just looking for the base, either something like this for that base, then a reaction to the upside. I'll take my trade as an override. And what is an override? Let me show you. So you can see this trend line. Let's just assume that price comes here and they start reacting. So now you can see that you have this outer structure of this trend line. So now this is the probable and this is the possible. And what is the override? An override, it just is you that price don't need to tap what, the outer what, trend line. Price might just react here, give you what, a retrace or a high test, and then push and start selling up. So what do? So you just know that this is your possible and this is your probable, and it doesn't mean that this is high risk, and it doesn't mean that this is what, a high probability trade. No, it's just like you knowing that, oh, the trade is still valid here, and also is what is more what valid here. So now what will make you to take this trade here is your candlestick formation. So when you see a retrace candlestick and what is over 50% of the previous candlestick, you can actually take out your trade, or it retraces all the body of the previous candlestick and closes what with a full body. Then it's just showing an indication that what the sellers has come into the market and they want to move market what to the downside. So now, just you understanding the area, understanding the candlestick that might form, it doesn't mean that you just waiting for price to tap here, which price might not, and what you see this trade and you left it and your price started going down and reaches here and you are saying, oh, I was waiting for this. Then you are putting perfection into the market, because the market is not perfect and you don't know what the market will do next. You just like trading, because trading is all about you be able to manage your risk. You're just like a risk manager, not just a trader. You're a risk manager, because if you're able to manage your risk properly, well, you're able to scale up and what keep your capital. Your capital preservation is the main goal in trading. So because if you are decapitalized, you can't be able to trade. And also if you are capitalized, you're able to see opportunity in the markets, and also what being not trading, or being without trading like a week, is still a trade on itself, because some people doesn't know how to keep their capital and they don't know how to know that the market now is in a state of consolidation. You just need to wait. You just need to weather the storm and keep calm and wait when that structure comes in, and you'll be able to see opportunity flowing in. So that is why when you preserve your capital, you see opportunity that you will able to entertain. But once your capital, you are decapitalized, you won't once you see that opportunity, you won't be able to trade it, because you don't have capital to trade. So that is just the little thing I just want to give you guys. And also the two touch, how do I look for it? Let me say this is an impulse. Then I was looking for a consolidation. This consolidation must give me this might be a consolidation. And then this is a two touch structure. This is a one, this is a second touch, and this is the base. This is a two touch structure for a sell. And also, what is a three touch structure? The impulse, correction. So this is a three touch structure. This one is steep. You can have the steep, you can have the flat, you can have the sideways. So there are different type of structures. So just like the one that works for you. So that's what I'm looking for, euro dollar. And also I will be taking it on the override if I see that candlestick, a high test, a retrace, 50% or full body close. So I'll be looking forward to capitalize. I'm not waiting for price to come to this area for me to take a trade. No. So if price tag me and tag me out, tag me in and tag me out, and I say okay, yes, maybe it's time to react from there, then I'll look at what the market is trying to say and look at the candlestick that formed. If I'm not able to take it, I'll wait for the impulse and wait for a 15-minute flag and take the trade. So that is just it. That is the two pairs I have on watch: JPN 225 and EURUSD. So this one is DSY dependent. If DSY is going down, some of it also be going up. But if DSY reacted on that place, on that weak point on the left, then you know that euro dollar is for sure selling off, and the structure, the patterns, they are similar to the DSY. So it's just a correlation stuff. You can use the DSY to correlate. That's why every morning I look at my DSY, because it's the dollar index pair, and whenever it's going up or down, this one shifts up. Euro dollar, GPN, Aussie dollar, New Zealand dollar shift up and follow otherwise. So I hope you enjoyed, and I also want to see your comments, your inputs, and also the areas you want me to cover. I will be very, very glad to give you such insights. And have a good and a nice trading day. God bless.